wealthy Australians are pouring more money into private markets. That's an asset class that has been in focus with a growing number of high net worth individuals allocating to private assets, according to LGT Wealth Management. Investors also becoming more hands-on as they search for alternatives. And this shift comes even as global credit risks rise and direct lending faces scrutiny following the collapse of U.S. borrowers, including First Brands and Tricolor. Bloomberg Intelligence says those bankruptcies related to private markets are isolated and not systemic. Alternative asset manager Blue Owl continues to see strong momentum in the space. Joining us now in Sydney is James Clarke, Blue Owl's global head of institutional capital. And James, great to have you. We know you're on the cusp of an even bigger push on the Australian markets. Thanks for being here. Talk to us first about how you're approaching Australia as a market, because, you know, whether you're looking at scale, sector focus, or lending, the sort of standards, I think US and Australian markets, they vary quite a bit.
Yeah, look, I think everything that we do overall in relation to working with institutions and wealth investors is about what's our role in their overall portfolio. There's often a lot of debate about public v private markets. It's not an or, it's an and. They both can coexist together, and what private markets essentially deliver for institutional and wealth investors is actually diversification. Diversification is about the only free lunch you get as an investor. And if you think about it, there's 19,000 publicly listed stocks out there. There's 140,000 private companies with earnings in excess of $100 million. So, you know, the selectivity bias really skews towards private markets, and often it gets charged with the moniker of risk, where in fact it's a great way to preserve income and generate income, and protect the downside.
Would you then say that perhaps the credit cracks that we saw last year are behind us? Do investors look past all this as they look at alternative assets as a diversifier?
Yeah, you have to remember that when an institutional investor, whether it's a sovereign wealth fund where you're at, or it's an Australian superannuation fund or a US pension, their duration is 20 to 30 years, okay? So the isolated incidents that you're talking about, whether it's Tricolor or First Brands or recently a non-sponsored alleged fraud, these are very isolated incidents. In fact, in the first two that I mentioned, First Brands and Tricolor, these were actually bank deals. These weren't done in the private markets. And if you look at default rates in the upper middle market, which is where we traffic, and the reason we do that is because we think that bigger businesses are likely to sustain cyclical shocks. The average businesses that we lend to are $300 million in EBIT, in earnings and greater. The default rates have actually come down. And we're seeing a lot of positive momentum. We typically traffic in the US markets, and the US economy relatively looks strong. You've got the big, beautiful bill, tax credits that are coming back. You've got monetary policy in the sense that you've had 3 rate reductions in 3 consecutive meetings, and you've got the potential to have 2 more this year. So the US still represents a very attractive opportunity. And as I said, when you're a scaled manager like us and you see everything and you become indispensable in the private markets ecosystem, you have that selectivity to generate returns and protect the downside.
And yet, James, the U.S. also presents lots of uncertainties, right? Whether it's Iran to Venezuela to Russia, and even just this morning we had the tariff threats on South Korea as well. So how do you explain this to investors, and what are institutional clients telling you?
Look, institutional clients, as I said, diversification is their friend, and they look at markets all across the globe. There has been some migration from institutional investors outside of the United States to look at other markets, but it's still proportionally a very big part of their allocation. So what we tell them is that, look, we're an investor for all seasons. Again, we're matching the duration of our assets with the duration of our investors, which is a 20 20 to 30-year time horizon, which is independent of administrative changes. By then, I guess we'll be on to our 5th or 6th president at the time. So who knows what's going to happen? The most important thing is diversification. And again, non-US markets do represent significant opportunity, but the US is very attractive right now. And it offers the greatest amount of selectivity, if the truth be known.
And yet, you said it, migration outside the United States, is this being accelerated by some of President Trump's new policies and uncertainties? And where do you see that capital going?
Yeah, Sherry, it's a good question. We've seen some of the capital in Europe going to Europe. We ourselves, actually, we do what's called sale-leaseback, triple net lease deals, which we've been doing, by the way, for the last 15 years. We've actually seen a very attractive opportunity in Europe ourselves. So Europe is an area that people are focusing on. There's different risks to consider in those markets, obviously. They're not immune to geopolitical risk. But again, when you're thinking about this, you really have to hone in on playing the long game and not being whipsawed by short-term gyrations in the market. As I said, when we work with institutional investors, they're not debating different markets, or they're not debating whether it should be public or private. It's like turning a jumbo jet around in a two-car garage, right? We're talking about hundreds of billions of dollars of assets here. So again, there's always going to be interest in different markets, and there's always going to be a focus on where they can balance the portfolio to reduce the downside risk.
How much of that is going into Australia? What are you expecting specifically in demand for alternatives?
Yeah, look, we're seeing a lot of demand in alternatives. Again, I mean, Australia is one of the fastest growing markets in the world. Compulsory savings rate, as we all know, of 12%. The scale of the assets here probably represents the second largest market in the world by 2032, I believe. Private assets are a way to mitigate the downside, as I said before. And Australia, I think, represents about 18% of total allocations to private markets globally. So we see that trend continuing. And look, we were here, we're a younger firm. We were here a little bit later than everybody else. We came here in earnest in 2022. You can hear the accent. I'd been in this market for a little longer, so I had pre-existing relationships. But the Australian market is very attuned to partnership. Okay, we're not here selling funds or selling products. We're positioning partnership, and we're playing the long game here. So we're ahead of schedule as it pertains to Blue Owl investment strategies. We recognize that to be successful in this market, you can't just bring a pitch book. You actually have to bring solutions. And we're very focused on the solutions. And again, we cover 4,000 idiosyncratic pension funds, sovereign wealth funds, healthcare funds all around the world. All of them have different ways to think about it. They all have different issues relating to their portfolio. And the key point is to offer your platform in a way that bespokely meets their needs. And as a bigger manager, and our cohorts that we compete against can do it, we have the scale to be able to do that. It's much harder if you're a smaller manager to compete on that basis. So one of the trends I will say, as it pertains to Australia and globally, is that fundraising was actually down last year for private markets, okay? But with managers like ourselves, it was up a lot. And the reason is that people want fewer partnerships. They don't want to be doing funds, and they want to do it with managers for the long term, making 20 to 30-year decisions here, not 1 to 2 year.
The long game, as you say. All right, James, great to have you on the show today. And thanks for sharing some of your plans about Australia with us. And a bit of a homecoming for you as well. James Clarke, Global Head of Institutional Capital at Blue Owl. We have more on Australia ahead every Tuesday at 11:40 a.m. if you're watching in Sydney, 8:40 a.m. in Hong Kong.